Before we get into it, if you enjoyed these videos, please hit the like and subscribe button, and keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as, investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that.
All right, folks, here we are on Wednesday, March 26th. We're going to take a look at the market today. I woke up today to feeling like there was an inundation of these types of stories about folks basically being like, big investors, big funds being like, buy the dip, V-shaped recovery coming, things are going to be great, you're going to wish that you had bought this today, so on and so forth. And so here's just a few of them. Tom Lee says a face-ripping stock market rally may have started. Odd timing given what we saw in the market today, and so weird way to rip your face. Michael Harnett, strategist at Bank of America, said that stocks saw the biggest weekly inflow of 2025, attracting $34 billion, indicating that investors are unconvinced by fears of a recession or bear market. And then JP Morgan Chase, or JP Morgan, investment bank, anticipates a V-shaped recovery beginning in late Q1 2025. Well, January, February, March. We surely are in late Q1 2025. So not quite sure when this is going to kick off, but it only has 2 trading days left to do so. Or I guess 3 trading days if you count next Monday. But it starts to feel to me, and I was responding to a bunch of these things that I would see online, and my basic gist was, I think that these big investors, these big funds, whomever, are basically looking for people to step in and hold a bag. In other words, they're looking to convince you that there is this V-shaped recovery coming, this face-ripping tear that the market's about to go on, because they want you to buy now. Why do they want you to buy now? Do you think JP Morgan analysts? Do you think Bank of America strategists? Do you think Tom Lee? You think these people are just like, oh, I want to help out the common investor. Let me tell them when to buy. No. I think that they want people to come in and buy now so that there can be liquidity to help them get out, and that then the retail investor or people who just hook, line, and sinker consume this stuff are left holding the bag while they wait for the real dip to find a floor and start buying back in at that point. It's just my 2 cents. You can vehemently disagree with that, but that's the feeling that I get. And in many ways, I have retirement accounts. I I don't necessarily want to see a huge downturn in the market. That will hit me really hard as well. So it's not that I'm like praying for this sort of a thing. It's what it looks like to me on the chart, given the Buffett indicator, looking at the valuation of the stocks, your PE ratios across the board. I mean, there's a lot of indicators that to me feel like we are just due for it. And then layer on top of that the economic and global chaos that's being caused by tariffs or uncertain alliances, so on and so forth. And I think you have a real sort of confluence of events that could get really dicey really quickly if we're not already on the precipice of it. Okay, so that's just an explanation of why I'm saying what I'm saying. It's not because I have some dire wish that things turn south. That will hit me really hard as well. Okay, so that's SPX, but we'll look at SPY here because you'll get the same gist, and I have levels filled out on here. But basically what we saw was this strong move up toward the 34. What I talked about in my video yesterday was look what it does when it gets to the 34. It could essentially get pressed down, right? That's why this box is here. It could essentially get pressed down and start putting in basically descending triangles against the 183 EMA here. And today we saw it unable to get to the 34. So to me, that is indicative of something. And then it did catch support right along the 183, that gray line that you see right here. That's the long-term EMA that I have on the chart. Now, it not getting to the 34 indicates to me that it's not the worst of all scenarios in the sense of it was able to get through the 8 and through the 21. right? If it had just kept pushing off the 8 like you saw here and pushed down, like that would be like, whoa, there's a lot of bearish momentum here that's going to have to be exhausted before anything stabilizes or turns around or whatever. The fact it was able to get through those, like, okay, maybe it's not as sort of heightened at the moment, the bearish momentum, but it is still strong enough to keep it off of the 34 EMA, at least for the time being. So that being the case, we'll see what this brings. We'll see if this 183 support holds. That would be the next thing to watch. This gray 183 EMA, can that hold? If it can't, we have 560, we have 547, and then a slew of levels below that you can see down here. If it does start to recover, back to the upside, really close in, we have 572, 588, so on and so forth. QQQ wise, it's going to look pretty similar, but it's in a little bit of a rougher state. The 183 here proving to be sort of impassable at the moment, still not able to come anywhere close to the 34, and it's having to catch support for the time being on the 8 EMA. Again, not like the most dire of circumstances, but if it cannot get motion above this 183 EMA, then yeah, I think, as we often see in these sorts of situations, QQQ, in other words, tech and growth stocks, more speculative, or things that are seen as more speculative, less traditional stocks, are likely to get hit much, much harder. And so that might be a bit of what we're seeing there. Tesla-wise, still not to the 183 yet. That's still situated up there close to 300. And today it had this like hanging man candle. Yesterday it was pretty clear hanging man, and then today just absolute just bleeding the day away. Fell through this 273 ultimately toward the end of the day here, tried to make a rush back toward it, came pretty close on this candle here as it kind of pushed back up, but the whole day it just started the day bearish, lost the 183. You see right there, confirms resistance on the 183, and then it just really took off and spiraled and drilled to the downside. So what we're looking at here is, in a different scenario, in a different macro scenario, I would sort of like this setup, to be honest with you. I don't, given all the factors that I talked about at the top, I have a hard time believing that typical chart patterns that I would oftentimes sort of like be really eager to jump into, I don't know that they're going to be able to withstand all of the fundamental and actual like news-driven catalysts that are coming our way. And so chart is one thing in sort of like a standard environment, right? You can kind of say like, okay, all things equal, here's what the chart's telling me. I don't right now think that all things are equal. That's the difference, okay? So that said, even with this hanging man yesterday, it still couldn't get to the 34, but it did wick up off of the 21 today. But just keep in mind, all of this price action is getting put in below the 183 versus SPY, where we see that putting in price action above the 183, right? So just in a generalized sense, this is still in bearish territory, right? Still bears in charge sort of situation, being that it's trapped under the long-term EMA. NVIDIA, I have levels down here. It tried to sort of like wick up off of this 114, right? Came down that 114 that we have on the chart, but then what happened here is just a very typical, this is what I say, when it rejects off of the 8 EMA, that's when you're sort of like, whoa, there's definitely more bearish momentum to be exhausted here, and that's exactly what you saw there, right? Reject off the 8 EMA, and then it just really took off to the downside. Hasn't made its way back to the 114 since it left it here, so we'll see what that sort of means in the days to come, but it's also trapped under the 183 at the moment. This one definitely looks harsher to me because this is rejecting off of the 8 today, right? It did come up and reach the 34, but the 34 was right laying on top of the 183, so it had like a rejection off of both of those right there, all in one fell swoop, came down, and just continuing today to catch full resistance right off of the 8 DMA, so back to resisting off the 8. We'll see if that changes in the days to come, but if it continues to resist off the 8 like that, this low is not going to stand for very long. This swing low, not going to stand for very long. Apple, again, in an all things equal environment, I would be less jazzed about this. I think the Tesla setup looks better, but this would be something I would keep an eye on. It's just a question of I don't necessarily think all things are equal. This is also situated below the 183 EMA. So you have all these big players situated below the 183, while SPY is still situated at or above the 183. So can SPY hold, under the weight of some of these big players being underwater as it pertains to the 183? And then QQQ is obviously already down there. VIX wise, coming down. Take chart analysis on VIX for what you will, but I just thought I would add it in here. Being short when the VIX is like in the 20s, and definitely as it approaches 30, that's a tough road to hoe. So just know as VIX gets back up there, climbs itself into the 20s and whatnot, there's going to be periods where it isn't just free fall, right? Where it's going to recover, VIX is going to stabilize a bit, and then see if it ramps back up. That's what we're seeing right now, right? It got really out of control up here, very high. Now, not as high as it has been at other periods, but I mean, you take this out of the equation, and this is really high, like mid 20s to 30. It's pretty lofty. And so coming back down today and basically trying to catch some support here off of the 183. Again, take the chart on the VIX with a grain of salt, but just to illustrate the idea, I would more pay attention to the raw number. That's why I'm saying mid 20s up to 30. Things start to get a little bit top heavy on the VIX, meaning they get bottom heavy on SPY, QQQ, other generalized stocks. But being now that the VIX is back in the teens, it's certainly not the lowest of the low points, but if the environment is relatively fear-driven, feels relatively risky, so on and so forth, then, I wouldn't be I wouldn't be surprised to see it climb out of the teens relatively quickly, get itself back into the 20s, and then see what it does at mid 20s to 30, like that stretch, 25 to 30. That's sort of like pretty telling, and is often a good time to look for a change in the wind, if you will. But all that means is you could have a change in the wind, things settle back down, and then it takes off again. Right? So just remember, when this VIX is going up, it should be that things like SPY, QQQ are coming down. All right, folks. Well, I hope that you have had a happy hump day and that you are not yet holding a bunch of bags. But we can come back to it. If you have tickers you'd like me to look at, please drop them in the comments. I should have said that 13 minutes ago, but here we are. But in any case, again, I hope that you've had a happy hump day and that you have a nice rest of your trading week. And as always, I appreciate you watching. Now we'll see you in the next video.